We have with us Mohammad Hassan, head analyst, hedge funds at Eurekahedge, joining in on the show right now. Mohammad, hi, morning. Good to have you on the show. Help us understand what's happening with the world and really the sentiment after the strikes on the Saudi Aramco fields.
So we have already been having a lot of difficult things happening in the markets these days. The markets are still kind of trying to recover from the aftermath of the U.S.-China trade war, which has had its good days, and now it has seemed to intensify over the years as things has progressed. And we have the elections coming up in the U.S. as well. And on Trump's part, he wants to appear to be in a good position going into that election and doesn't want to seem to have gone soft on the whole China trade issue as well. So we have been having those issues, and then on top of that, global economic growth has also been weakening from across developed markets to emerging markets. And on top of that, now we have seen this crisis in the Middle East as well, which has been in the offing for quite a while now. But what has happened in recent weeks has been quite shocking as to the extent of the attack. So clearly there are some worries. We are potentially looking, if tensions escalate, we are potentially looking at an oil shock, which means that the countries that you need to watch out for in the emerging market space are those that are running both fiscal deficits and current account deficits and have increasing reliance on energy. And at a time when money has already been pulled out of emerging markets and investors are sitting on the sidelines, this is going to complicate the overall picture.
Right. What about India and specifically, because the growth concerns when it comes to India are pretty much out there for anyone to read with regards to an economic slowdown, the FPI surcharge. Even though the rollback has come in, we've seen a big FI exodus. The outflows have been the highest ever in the quarter gone by, more than even 2008 as a benchmark. What is it that you're making? Does it seem like this FI pullback would continue to be a trend, or do you think that there is a high likelihood that inflows may come back to India anytime soon?
Okay. I would expect things to reverse, but investors are likely going to watch on what the RBI is going to do and how the government of India is also going to respond to some of these weaknesses in the economy. We need to bear in mind that although India's growth has slowed down a bit and the numbers have come down on the slower side, but we're still talking about an economy that is expected to grow by IMF estimates and other independent estimates by still around 6%, which in the kind of the anemic global growth environment that we're looking at, that's still a pretty solid numbers. On India's front, you rightly mentioned there was a miscalculation on part of the government with regards to the foreign portfolio taxations. Luckily, that has been rolled back, so that has calmed some investor nerves as well. But more so, it's basically been the corporate earnings that have been weakening that are asking investors to question about their allocations to India. On our side, for example, for hedge funds for 2019 year to date, they are down around 4% on average. If we look in particular at equity long-short hedge funds as tracked by the Eurekahedge index, we are looking at losses of 5.19%. And a lot of these losses have come primarily from the exposure to the small mid-cap space, which, as you know, has struggled a lot. Having said that, I feel we have kind of got a silver lining on the market, on the horizon right now, with the U.S. Fed coming out and cutting rates. That is likely to see the U.S. dollar depreciating as well. That should provide some support to emerging market currencies as well. And on the back of that, we should see some money flowing back into emerging markets. However, I also feel that perhaps RBI might be coming out to support the markets as well and provide further policy level support. And we should also expect the government to step in and help out on the fiscal front as well. The only complicating puzzle in this whole situation would be concerns about what we discussed before, the oil price shock that we are seeing, and whether if inflation considerations are going to weigh in on RBI's mind, and similarly if those, the concerns about an increasing current account deficit is going to weigh in on the fiscal side as well.
Okay, what about the global picture, Mohammed? What's your view on that post the Fed cut and also the kind of commentary we've seen this time around? How do you see that impact money flow?
Well, right now, with the rate cut, of course, it's provided a bit of breathing space to the market. But if we look in the long run context, what we are seeing is we have seen a long run in which interest rates have been cut almost down to 0% level. Then we saw policies normalizing, rates moving up, and now that cycle has been over in the shortest possible time, which is not a good news. It means that a lot of the policy level interventions that were done, QQE, they have not been very successful in trying to stimulate real growth within the economy. Perhaps they saved us from the disaster, but perhaps the disaster of the global financial crisis of 2008. But beyond that, it seems like the markets are still not weaning off all the support that they've been getting from central banks. And in the long run, that's kind of a scary thing to be looking out at.
Okay, sure. Any particular segments or sectors that you're tracking at the moment as well? And also on the commodity front, we spoke about crude, but we are also monitoring what's happening on other commodities given the current global picture. Any comments there?
So the good thing about August was essentially that on the hedge fund side of things, we saw a good bounce back in the returns for macro and CTA hedge funds. A lot of these funds had taken positions, long positions in gold. A lot of them had been expecting the kind of interest rates on the long end to be going down, so they took positions in that. They have benefited on that. But the thing to bear in mind is that overall across the globe, we are seeing weakening global growth, and that is going to have an impact on commodity prices as well, vis-a-vis demand. And countries that are depending on that are likely to see difficult times ahead as well.
All right. Thanks so much for joining us.